right. Well, we are right at 6 o'clock. I think we do have someone on the line here. So, like to welcome everyone to our session today. My name is Royce Sutton. I am the Ohio Community and Economic Development Market Manager for Fifth Third Bank, and we're going to spend some time today just really taking a look at the home ownership process but with a little bit more depth than what we were able to get into on Saturday. And I tell you, what we experienced this past Saturday with our Owning It workshop in partnership with the Herald, the Dayton Defender, the Center, Priority Plus Realty, um, the Dayton Weekly News, the African American Chamber, the Greater Cincinnati Realtist, and working in neighborhoods was nothing short of spectacular around the level of engagement and the interest that so many showed around this idea around becoming a homeowner. Home ownership is one of the keys to creating wealth for one's family. And the idea of being able to become a homeowner is a process. It's a process that once you bring on some folks who can kind of help guide you through that, it just begins to make a whole lot of sense. But what we're going to do today, we're not going to walk you step by step as we did in the session that we had on Saturday. That session is recorded. So if you're interested in seeing that over again or you're seeing it for the first time, we do make that available to you with the link so that you can see that recording of the home ownership process. Great discussion around that. Now today, what we're going to do, we're going to get into, we're going to open up and provide an opportunity for those that are on this call to ask us questions that maybe we didn't cover on Saturday, or maybe you need a little bit more detail, or maybe there was something that you're thinking about this next step and you just want some guided advice on what to do. That's what we're here to do today, to allow you that opportunity to really grow, develop, and move to that next step financially and to become that homeowner that you're dreaming about as you're thinking about this. Maybe you're thinking about the holidays. You want your family to be together all in the house that you've purchased. That would be fantastic. Fifth Third would love to be able to help to make that dream come true for you and your family as you think through this idea of becoming an investor in real estate. That's really what it comes down to. So there are no questions that we won't ask related to housing, that is today. Anything related to home ownership, down payment assistance, all those things that you're kind of bubbling in your mind right now. We want you to use the chat if at all possible, or we'll open the lines and allow you to ask us questions directly in our session today. We're going to move to the next slide as I'm going to walk you through what the session is going to look like during the course of our discussions today. So obviously I've opened it up for welcome, but we've got several people who are on the line today, experts who will be able to walk you specifically through this process. And if you have to ask the question a second time, we're more than happy to respond to it. But I've got Phil Fleshour from our Fifth Third. He's our mortgage area sales manager for Fifth Third Bank. Got Dan Beckley, who's a CRA loan specialist for Fifth Third Bank. Veronica is going to join us. She's not on. She's on now. Yeah, Veronica's on the line. She's with Priority Plus Realtors and the Ohio Realtors Association. I've got Maria Rutherford Long, who's a community and economic development manager right here in this market. And I've got our partners from the Cincinnati Herald and the Dayton Weekly that are also joined us as well. So we've got a group of folks, and today is your day. We're going to open this forum up, allow you to ask the questions that are kind of burning on your minds. You've been thinking about this for a couple days since we had our session on Saturday, and now that's what we're going to do. We're going to spend some time answering your questions. So that's really the format today. So if you've got 5 questions, if you've got 3 questions, whatever, we're going to spend the time and walk through those questions for you with detail. When we get to the conclusion of our questions, we're going to share with you the contact information for everyone that's on this call today. The professionals that are on this call, we're going to share that information with you. And also, there's some other sessions. I want to make sure you don't miss out on those that we've got coming up here soon. But with that said, I'm going to open it up now, and I don't know if anyone already has questions in the chat. But what I want to do is allow those who are going to be speaking today just to introduce themselves briefly and tell you a little bit about their background. So Phil, I'll start with you. We'll go with Dan, and then Veronica, you'll be next.
Sure. Thanks, Royce. So my name is Phil Fleschauer, and I'm on the mortgage side here at Fifth Third Bank. Been with Fifth Third for about 30 years, so really all of my career. But yeah, my area of expertise is on that front side when you're looking to go out and get your first loan, or maybe it's your second or third. But that's the area that we can help you answer any questions. And Royce, also, I guess maybe that's probably your next step, but can you maybe go over the chat feature of how to use it? I know this was my first time on Zoom, but maybe you can go over that piece for us.
That'll be great. I'll do that. Dan?
Hi, my name's Dan Beckley. I've been with the bank for about 15 years, and my focus of my career has been helping people to purchase homes and real estate and basically get the education that they need to be able to pursue those dreams. So I'm really excited to be able to share. And if there's a question that I can't answer, I will figure out what the answer is, and I'll get back with you personally.
That's great. Veronica.
Hello, everyone. My name is Veronica Bedell Nevels, and I am the owner of Priority Plus Realty in Dayton. We work in Columbus and Cincinnati. I'm the president of the Ohio Realtist Association, and I'm here to answer any and all questions that you have related to your relationship with a real estate professional. How to work with a real estate professional, how to choose one to help represent you. Any questions that you have about the process of writing an offer, any question that you have about that process, I'm here to answer those questions.
Great.
Thank you.
Great panelists that we've got here today. So just to walk you through briefly how to use the Zoom format that we're working with here. If you move your mouse or anything like that on the screen, at the bottom of the screen, you'll see like what looks like two people, and has like a little number by that. Right now, mine is showing on the 11 by the people there. That's the number of people who are on the call today. Next, just to the right of that is what looks like a little cloud where someone would speak. If you click on that little cloud, that is the chat function. Click on the little cloud, and then that'll bring up a box. And then that box will say chat. You got participants, then you got chat. So if you look down and see chat, someone just put a message and says, "Hi, everyone." So if you go at the bottom of it where it says type message here, you can put you can just type your question right in. Don't worry about your spelling. I'm a terrible speller myself. So so you can just put your question in there, or you can unmute your line and you can go ahead and ask your question verbally if you choose to do it that way. But you may have 2 or 3 questions that may be spinning through your mind. I said we're going to open up and allow you the time to be able to walk through and thoroughly ask all you. And if there's something if we don't answer it clearly, if we don't respond to you clearly, please let us know. We don't want you to walk away from this session not having the information that you need. Now, I do encourage each of you here, because we are kind of getting to a little bit more detailed thing. I would encourage you to have something to write with, some paper, so you can take some notes. You can reflect back on that, and then you can kind of follow the discussion, and then reflect back after this session is over with today. Well, with that said, again, we're going to go ahead and launch right into the question period. And if anyone has a question, you can unmute your line and start talking. Hopefully, we won't end up talking over each other. But we can unmute your line, or you can go ahead and put a question in the chat. So I'll quiet down now, and allow our panelists to respond to your questions. Go ahead and move to the next slide there, John, if you could. Move to the next slide. Okay, that just discusses what we're going to do. So the process that we're going to take. And then now let's move to the next slide. Okay, so we're ready for questions.
There's a question in the chat, and it reads, how much do I need for a down payment?
I can answer that. There's a lot of different programs that require little to no down payment. It depends on what you qualify specifically. We have programs that have 3% down payments, but there's also down payment assistance programs that are available through Fifth Third, through the city, through the county, through all sorts of different, it depends on what location that you're in, what programs are available, and also what time of year, because a lot of different places get different funding sources or have different funding sources that funds at different times. So it really is something that you need to speak specifically with an originator to help you through that, what's going to work for you. But there are many times that I've helped people come to closing with no money at all, where we were able to use grants and assistance programs to cover everything. I had one the other day where the woman had to bring $72 for her closing. So there's a lot of different options.
Dan, I'm going to jump in there because this is one of the questions that I know we often get in these type of forums is around, can you talk about the, or Phil, or in Veronica, if you want to jump into, but the whole discussion around credit scores and how that impacts, when do you start pulling a credit score? Any advice on things that a person could do even before they sit down with you related to credit scores? Can you talk about that?
Yeah, I can discuss that too. So with credit scores, it's really there's a lot of estimators out there, so you can get on and go to Credit Karma and other things like that and get an estimation of your score. Fifth Third has a product that's called the Identity Alert, and you can get a credit report pulled once a month that has pretty good score estimators on there. So really, until you talk to a loan professional in regards to your pre-qualification, you're not going to know how that's necessarily going to fit. So that's really what I suggest is it doesn't need to be that you're ready tomorrow, that you want to buy a house. A lot of times I suggest people start at least 6 months early. If they're thinking that they want to go on a journey for homeownership, then they need to think about 6 months before. That way, if there is anything that's on the credit report that's an issue, then you have time to dispute that. So I've had some clients in the past that have thought they had perfect credit. We sit down and we pull their credit report, and they've been a victim of identity theft. So we take the time at that point, and I can help guide them for the resources that they'll need to dispute the things that are on there that aren't theirs and to get their credit reports cleaned up. It also gives you an opportunity to start saving if you need to save for some money. It just helps you really build that plan. So the farther ahead, the more prepared you can be.
Any thoughts, Phil, on that question?
Sorry, I had to get off mute. But yeah, so it kind of to piggyback on what Dan said, they can take a look, if they have Fifth Third Identity Alert, they can get an idea of their score. Dan can point him to some partners of ours that will help with credit repair. And then when they feel they're ready, that's at the point we would do a pre-qualification and actually officially pull their score and go through the pre-qualification process. So that would be kind of the third part of that is doing the pre-qualification.
Veronica, I see there's a question. Oh, you got
yes.
it. Got it.
Yes, I do. I see, and this is important, very important. the question is, hi, everyone, do the real estate broker work with the loan officer, and how do they work together? And the answer is yes. It's very important that you see your loan officer first, and then you come to the real estate broker. And because the loan officer is going to get you pre-approved for a loan, and the kind of loan that you're pre-approved for determines what kind of house and what price range of a home we are looking for in the home buying process. So it's very important that the loan officer is the first stop, and then you come to the real estate broker. And that's why it's important
Veronica, then
that
this
we
may be a
work
question.
together.
This may not be a question that you fully have to answer, but I want to make sure our audience is really clear. You know, we deal with this a little bit more often. So when you use the words pre-approval, what does that really mean? What to kind of explain that and why that's so important in the process. And Dan or Phil, you can jump into.
Yes, I'm sure Dan will be happy to jump in. But the pre-approval is something that we look for from the lender. So that means that the person has gone to their lender, they've given them all their initial documentation, they filled out an application, and based on the information that they have given to the lender, then that lender determines whether or not that person qualifies for a loan, and will write a letter that states that they are qualified for, say, an FHA loan at $150,000, and they bring that to me, and we can go from there. You're qualified for $150,000. It's an FHA loan. So there are certain types of houses that we are going to look at. And with an FHA loan, they have certain requirements. So we will not be looking at bank-owned properties or properties that have peeling, chipping paint, that have discrepancies that FHA will not approve. So and Dan can step in and talk about how long that pre-approval takes, because there's a question about that. And he can be more specific about the pre-approval letter, but that is something that we do look for. That's the initial step.
Sure, I can take it from there. So a pre-qualification and a pre-approval are very similar, but they're not exactly the same. A pre-qualification is where we've reviewed credit, we have built the scenario with you. We may not have all of the documents as far as pay stubs and tax returns and all those things, but if we ask all the right questions and we really work, you know, and you're honest with us and we work with you, then we can give you a really solid pre-qualification. And that's going to help you determine exactly what you're going to qualify for. A pre-approval is where you actually collect all documents necessary for a loan and you send it down to an underwriter, and that underwriter then underwrites that loan based on that fake scenario that you've created. A pre-approval is a lot less flexible though. So if you're looking in different price ranges or you're changing different parts of what you want to see, it's going to be a lot more difficult with a pre-approval because it's sent down once and it's looked at. So with a pre-qualification, which is typically what I do most of the time, we have the flexibility to run it through at 100, then we could look at 140, and we can look at 70, and we can look at all these different ranges for different properties. We can put in specific taxes and insurance for different specific properties so that we can have something that's going to be really tailored to what you're actually looking at, which is really important because different properties are going to have different taxes, which will mean that they'll have different payments. They'll have different insurance, which means that they'll have different payments. So you know, the more you can tailor and be specific with that, the more helpful it's going to be. One thing I was going to say too about the previous question about working with your real estate agent, if you don't have a good team between your real estate agent and your lender, then that could spell disaster. It is really important that your lender's communicating, you know, honestly and quickly with your real estate agent and vice versa, so that we are all on the same page, really with a tight team to help you through the process.
Dan,
And then I see
there's
another
a little
question.
bit additional. Did you see the question about the length of time it takes for a pre-approval?
Yeah, that's what I was going to say. I
Okay.
was going to catch two of them. So I was going to catch that, but also the veterans. We do
Okay.
offer the VA loan, and there are specific guidelines for veterans if you qualify for the VA loan. And I can talk to you more specifically one-on-one to see if you qualify and what's going to fit for that. And then a pre-approval, it takes about 15 minutes to process. And with our new system that we have through our mortgage portal, you can even input your information ahead of time so that it sends it to me, and then I can process it. And then once we're done with the processing, then we can have a conversation on exactly where things stand and what you can do. The pre-approval also is good for, or pre-qualification is good for 90 days, which I see somebody commented that right when I was saying it, but it's going to last for 90 days because that's how long we think that the credit report is good for. Our guidelines allow us to use a credit report for 120 days, and we know that it's going to take at least 30 days for that process for a live loan application to go through. So we let those pre-qualifications last for 90 days.
So Dan, in a market like we're seeing right now, where finding properties is a little bit more challenging, how does this also benefit the buyer in these times?
Well, once you have a pre-qualification file opened up with me, you're going to be able to communicate with me quickly. I can put something together that's matching up to a specific property for you to make sure everything's good and get you a fairly tailored letter and worksheet for that individual property that you can give to your real estate agent to make those offers. And it's also something too that you can be flexible with and maybe raise the amount, lower the amount, and make adjustments to it. But there's not a seller out there in this market for sure, or most real estate agents that are going to spend any time talking with you until you have your bank letter.
And let me say something too, that bank letter is so vital because it's so competitive right now. The market is hot, it's on fire. And we have people that are bidding above asking price. So that's why it's really important for us to be able to communicate back and forth with your lender, because you might be approved for 150 and there are 8 offers on the table and they want the highest and best. And we need to communicate with your lender to see if you can go above that. And how high above that can you go so that you can be competitive when you're writing an offer, because this market is very, very competitive right now, highly competitive.
And that's going to vary too as well from house to house. So you may be able to bid 150 on one house because the payment based on taxes and insurance and PMI and all the parts of that payment are X, but another $150,000 house that has much higher taxes and other costs, you might not qualify for. So if you're trying to really ride on that edge, then it's really important that you're communicating with your agent and your loan originator so that we can help you figure out exactly where that payment's going to fall, on that particular home, so that you know how high you can actually go. The rule of thumb out there is that there's about $4 to $5 per thousand is roughly the difference in an offer, but that's going to be different for each house because of those taxes, because those are fixed. That's a fixed part of the payment. So even if we raise the offer by $10,000, the taxes and insurance part of the payment is going to stay the same.
Dan, we got a question. Someone from Facebook has asked, can they bid on more than one house at a time?
I think that may be unwise because you don't want to get stuck in 2 contracts and not be able to close on both, unless you are actually looking for 2 different houses to buy at the same time. But if you're only looking for one house, that could be an issue for you.
So when you bid on that house, you place your bid, what are you saying to that prospective seller to that home? In other words, I think that's what you want to make sure we're real clear on this.
yeah, you're giving them a contract that says that you're going to buy that house if they accept that offer that you've sent to them, and you've signed it. So you unless there's contingencies within the contract to where you can be released from that obligation, you may find yourself stuck. And that's definitely a question that I think that our realtors should also comment on as well. But that's something I would be careful of.
And that is so true. It's a no-no. We only bid on one house at a time. It is a legal and binding contract that you sign. And if a seller accepts your offer, then you're in a legal contract, and that seller is affected by that, impacted by that. Your time is of the essence. There are certain things that have to be accomplished within a certain time period. So you're working on your side as a purchaser, and the seller is working on their side as a seller. They're trying to pack, to move, to buy another house or whatever. So this is serious business when we're out looking for houses and we're writing contracts.
Yeah, this is the largest transaction that most people will ever enter into in their lives.
That's true.
And the idea of making sure that you really understand what this means is the value of having a good banker, having a good real estate agent to guide you through so that you fully understand this process. Because as Veronica was indicating, there's certain things that you have to make sure you get done. You sign on that contract for that house. You've got to show that you're working toward closing that agreement that you signed off on. So you can't just drag your feet on on getting things turned in that are asked for as well.
It can have big consequences down the line as well. Because, for instance, I recently had a transaction to where we had a closing scheduled at 9, and it closed on time, thank goodness. But I had 4 sets of real estate agents calling me, because if that one didn't close, then the seller from that one couldn't buy, then the seller from that one couldn't buy, and the seller from that one couldn't. So we had a situation where if we wouldn't have been able to close, then at 9 o'clock, then the 11 o'clock closing would have failed, which then would have meant the 1 o'clock closing would have failed, and then also the one that was at 4 o'clock.
Oh, wow.
So that's why it's a legally binding contract, because once you get that, you have to follow through. So you have to make sure that you're prepared. That's very important. Not to scare anybody, but it's just very important.
There was a term that was used a little earlier, PMI. Let's make sure we share that with the audience around what PMI means.
PMI is private mortgage insurance, and it's a type of insurance that is taken on by the lender to insure against default. So on FHA loans, for instance, it's called MIP, mortgage insurance premiums, but it is basically something that is insuring against the losses that are going to happen if you were to not pay back the loan on your home. A lot of people believe that if you buy a house and you don't pay, then the bank takes it and it's not a big deal. But it is actually, there's quite a lot of expenses. While we own that home, if we do have to take it, we have to pay for maintenance. We have to pay for the grass to be cut. We have to pay the property taxes. We have to insure it. We have to make sure that the roof stays on. We got to make sure that things, don't get further damaged. And a lot of times people will stop paying their mortgage last. They're not going to stop paying their mortgage first. They're not going to paint their house and put new shingles on the roof and do things for maintenance if they can't make their mortgage payment. So if there is problems, then your mortgage payment is probably not going to be the first thing that starts to have issues when it comes to maintaining that home. So private mortgage insurance allows banks to have a safer time at lending at much lower down payments than we'd be able to financially if we didn't have private mortgage insurance. However, some programs like our Fifth Third Community Mortgage, we allow to go up to 97%, and we pay what's called lender paid mortgage insurance on the back end that you don't see. So there is no buyer paid mortgage insurance on the Fifth Third Community Mortgage. It also comes along with a $1,500 closing cost credit and it can be combined with that down payment assistance program that we talked about on Saturday as well. So it's a really good option for a lot of people. But that's basically an explanation of what the PMI, or private mortgage insurance, is for.
Now,
Hey,
Dan,
I'll add one more thing on here. This is Phil, but that private mortgage insurance, depending on what type of product you go with, there is potential for that to come off of the loan at some point based on how much equity you've built into your house. Maybe you've done some improvements or even getting a new appraisal. So typically, if it's at 75 or 80% loan to value, that may be able to drop off at some point.
That's actually a really good point. So on conventional programs, if you do have buyer paid mortgage insurance, it will automatically fall off if you pay it on schedule and reach 78%. You can actually make extra payments and pay it down more quickly. And all you would need to do at that point would be to contact the lender or the bank that has your mortgage and write a letter, and they can help you have a request process to have that removed early. So a lot of folks will have a loan that they plan on maybe selling the house they're in currently and putting a small down payment down now, and then coming back after they've sold their house and pay that loan down with some of the proceeds under 80%, down under that 78% mark, and having that PMI removed. We can also at that point do what's called a re-amortization, where we stretch the payments back out. So there's a lot of different options in that case as well, but that can be removed on those. On FHA loans, unfortunately, it is something that in a lot of cases is permanent for the life of the loan and can't be removed unless the loan is actually refinanced.
so what are some things that are built into the process that protects the buyer through all of this? If you want to talk about inspections and all the other things that kind of really protect the buyer through this big purchase that they're about to make.
I think Veronica would be a great person about some of those.
Yeah. Well, one of the things, once you go into under contract and you're meeting all the deadlines for when you're ordering the appraisal, when your lender is going to order the appraisal on the property, when you do your inspections, that is really the only time that you can legitimately get out of a deal. And that's only if you and the seller cannot agree on the repair items. So when you do a whole house inspection, some people hire someone that can come and they'll inspect the entire house. Sometimes they'll hire individual vendors who are, say, an HVAC person. They will hire an electrician specific to certain issues in the house. They'll hire a plumber, and but when those people do their report, and that report is evaluated between you and your agent. You sit down, you go over the report, you look at things that affect habitability, not things that are just decorative, but things that affect a person moving in and being able to live right away. For instance, you don't want to move into a house where there's a leaky sink, or there's the dishwasher doesn't work, or the hot water tank has a lot of I forgot what they call it. It's green. It's gunk. It's there's a possible leak there. Something like that needs to be evaluated by a professional so they can see that this hot water tank is, needs repair, or there might be a pipe that needs to be replaced, that it's functioning the way that it should function so that it's safe. Safety is the key. So your heater has to be evaluated, or the furnace. The AC is evaluated when weather permits. So in the wintertime, ACs typically are not even checked, but you have to agree on what needs to be put in what we call a post-inspection report and given to the seller. Now, if you don't like the way the color of bedroom number two, and you don't like the carpet in bedroom number three, that's on you to change. That doesn't have anything to do with habitability or safety. Those are decorative items. If there's a leak in the roof, if somebody goes up in the attic and see a hole in the roof, or they go on top of the roof and they see that the shingles are decaying, they're dry, they're brittle, they need to be replaced, the roof is on its last leg, you might want to ask the seller to replace the roof. And if you and the seller cannot agree and you cannot live with what the seller is agreeing to or not agreeing to, then that's when you can say, then I don't want to buy this home. And that's when you can step back, step out of the contract legally. Dan, did I miss something?
No, I mean, when I bought my first house, I got 2 inspections on 2 homes before I actually settled on the one that I bought, because I'm not that handy. I'm not a construction person. I'm a musician, I'm a dad, and I'm a banker. That's what I do. I don't know. I don't have a construction eye. And so I went in and I put in the offers on these houses. They were accepted. I had my inspections. And then for one of them, for instance, he showed me a line on the wall in the basement that was about 4.5 feet up the wall. And he said, that's a water line. That means that there's been this much water in this basement. And I said, well, my drums aren't going to go there then. So this house is not going to work for me because it's had serious flooding in the past. And the seller said they've done nothing to remedy it, and that, that it could happen again, but, it hasn't happened in a while, and it wasn't enough for me. It wasn't satisfactory. So we moved on to another house. And I'll tell you that inspection, I believe, saved me way more than the inspection fee, because I was able to not put money, into having to redo that whole basement and get a waterproofing and spend maybe $10,000 or something on that there. Another comment that the inspection is so important because the appraisal is not necessarily for you. The appraisal is for the loan, and the appraisal is going to show what the market value is. But the focus of the appraisal is that market value for the lender, to make sure that it's worth what we're paying for it. If it comes in low, then a lot of contracts do also have an appraisal contingency that could give you an opportunity to renegotiate the price or back out. But right now in this market, a lot of people are asking to waive that contingency for the contracts, which I personally wouldn't do, but that's something that's out there right now too. So you just got to make sure that you and your agent talk together and figure out what's gonna protect you in that contract and what's gonna make sense for your situation.
Hey, we did get a question that I want to make sure that came in. I want to make sure we don't get too far away from it. But the question was about couples who may not necessarily be married, but they want to purchase a home together. What is the process, the approval process for two people who want to purchase a home, and not necessarily married?
It's not required that you be married to purchase a home. You can buy a home with your friend, with your cousin, with your family member, with your domestic partner, your boyfriend, your girlfriend. You can buy a home with anybody. But it is a big commitment, so you do have to make sure that you're willing to get into that kind of commitment with that person. But there's definitely nothing that there's no laws or anything like that. You can apply together on the same loan application, whether you're married or not.
Hey, Dan, I'd also add in there's a term we use that you can even have a co-borrower that we call and again, depending on the type of product, it's called a non-occupant co-borrower. So there's a lot of times where maybe somebody out of college or buying their first home, maybe they need to have like a parent on there as what we call a co-signer, but that parent would not be living in the home. So that's when we call it a non-occupant co-borrower. So we do have those situations as well.
Something to remember about non-occupant co-borrowers is, though, you can't, in a mortgage world at least, you can't co-sign credit. When you're being a non-occupant co-borrower, you're strengthening the application and you're adding income. But if the main borrower's credit score is below what we can, or they have credit problems beyond what we can lend, then the co-borrower, having a co-borrower with perfect credit will not fix that problem. So that's something that has to be addressed on the individual level first, as far as the credit goes, to be able to help you.
So with that question, two family members decide they want to buy a home, and you're using the income and the credit qualifying information from both individuals. One of those individuals decide, I think don't think I want to live here anymore. I'm moving out of state, and it leaves just the one person there. What happens in that situation, and who's held responsible for anything that happens with the home regarding the payments?
They're both going to be held equally responsible for that loan still. That's why I said earlier that it's important that you assess the commitment level to make sure that you can afford the home on your own and individually, if you plan to end up like that at some point, or that you can negotiate out of it, at least to put it up for sale or buy the other person out. There's a lot of different ways that can be handled. I've helped a lot of people refinance their loans, for instance, and take a co-borrower off. So that's something that can be dealt with, but it is something to consider that, as long as the loan is in both names, the repercussions of not paying it back are also going to affect both parties, or three parties, or five. I mean, you can apply with multiple borrowers. So I've done loans for 4 or 5 people that are on the loan application before. So it just depends on the way you're going to structure it for your family.
There's another question.
Any other questions out there?
Yeah, I see one. It's from Facebook Live. And the question is, what is the best way to write an explanation letter regarding derogatory items on a credit report? One of the things I will say is that most of the credit reporting bureaus do have some form letters. They will give you an example of what that looks like. But before I went into my credit report, I would work with one of the consumer credit counseling agency or the housing counseling agency, and we'll have their names up on the screen in a few moments. In Cincinnati, it's Working in Neighborhoods. And in Dayton is the Homeownership Center of Greater Dayton. And they both specialize in helping you do those kinds of things. They're not on the call tonight, but we're certainly happy to make a referral. Anybody else want to weigh in?
Yeah, I can comment on this. So what will usually happen is that your underwriter who's making the lending decision for the lender will request a letter of explanation in regards to derogatory credit. So it's really important to talk with your lender or talk with your loan originator so that you can find out exactly what it is that underwriter is wanting to hear from you or understand from you, so that you can tailor that letter to explain what it is that they're wanting explanation for. Many times it's just an explanation of what had happened. It looks like in the past you had been late on your car for 3 payments, but everything else is good on your credit. The underwriter wants to know what exactly had happened at that point, and a good letter of explanation sometimes can actually get that loan over the hump, to where, I unfortunately at that time I had this happen. I had lost my job because of this, or my spouse had passed away, or some reason that out of the norm thing happened with your credit. And then a lot of times that'll happen with a bankruptcy. We need to write a letter of explanation on why that bankruptcy had happened, and make sure that it wasn't just financial mismanagement, just you bought too many TVs for your house because you wanted them. And it was, you know, that it was something that was a situation that was a problem that we were able to resolve, or that you got through. That's not going to be a recurring event. And then that'll be something that you'll put together with your lender. And a lot of times I'll write them with my customer. We'll sit down and we'll talk about what happened. And then I'll look at exactly how the loan condition was phrased by the underwriter, so that we can really explain, without going into a whole bunch of side stories and other things that aren't necessary, what had happened, so we can get that pushed forward. They may ask you to also explain deposits in your bank account that are large. They'll also maybe have you explain whether or not you have a homeowners association with your house that you live in. Sometimes they'll ask you to explain gaps in employment, or anything that doesn't quite fit the perfect picture. A letter of explanation can go a long way to help with that underwriter to get it through.
Any other questions out there? Any other questions? It's good discussion that we're having here. And, you know, I think that when we talk about this whole prospect of becoming a homeowner, everyone is doing something for the first time. It doesn't necessarily mean that when you're going through the first time that you'll be a little nervous about the process and all, and maybe even have a little doubt about maybe should I do this? Is this too much? You know, all those things are natural. Those are natural reactions that you have when you're making a decision that's so important like this. But that's where having good professionals on your team can help to manage some of those concerns that you may have, kind of reduce some of that fear that you may have, allowing you to thoroughly understand the process and getting your questions answered, so you don't feel like you're out there on your own trying to figure out how this process works. Dan, can you talk a little bit about, and you as Phil as well, and then Veronica, I'm gonna have you. So what does someone need to do to set an appointment with you? What should they expect in that first time they sit down with you, Dan?
Well, it depends on where they're at. I really want to take people where they're at. So when people call me or contact me, one of the first questions I ask them is what's your plan? Do you plan on buying something in the next couple months? Do you plan on buying something in the next month? Do you have a lease that's coming up? Are you looking in the future that you know you have had some credit problems, or you might have some obstacles? And really figure out where they stand. And like I said before, the pre-qualification is a really good gauge of what obstacles that may be there that we have to overcome together in order to get there. It's so important. I mean, a lot of people get discouraged because they maybe when they were younger, they didn't understand credit as well, you know, and maybe now they're back on track, but their scores are still a little bit low because of the things that had happened in the past, or the scores are a little bit low for reasons they didn't even know were a problem. A lot of people don't know that the balances that you have on your credit cards and the closer that they are to the limit, you know, the more it's hurting your credit scores. So there's a lot of different pieces that we can kind of put together to create your individual journey to homeownership, which honestly I'm really passionate about it. The reason that I volunteer to do things like this and all the education pieces that I do is because, you know, multi-generational wealth is really the only way that we can have our children and our grandchildren not start at level zero every single generation. You know, the more that we can invest in our families by home ownership and building equity, the better chance that we have maybe that our grandchildren aren't going to have huge student loans. You know, that they're going to have the opportunity to own something and not keep starting over at the very bottom every single time. So I think it's important to, no matter where you are in the process, work with the experts, work with the team that you trust so that they can help you figure out exactly where you stand so that you know where you can go.
Hello, this is Walter White. We have another question. What is the HOA responsible for?
Well, I can answer that question. Homeowners associations, excuse me, the responsibilities, they vary depending on the condo that you might purchase, or you might move into a housing development that has an HOA fee that might be annually. They might have a yearly fee of say $173. And that fee is to maintain the front entrance of the housing community, the development, where they might have the name of the development at the front. There might be a brick wall, and you drive through and it looks very beautiful, with the grass, flowers. And sometimes it's just maintaining that, as well as sometimes they might do snow removal on the street. But with a condos, they really vary. I sold a condo recently that paid the water bill, and they've been paying everyone's water bill since the 70s. And that's really rare. Condo associations typically maintain the exterior of the units. They will replace the roof. They keep the grass cut in front, bushes trimmed. They do snow repair. And that's some condo associations. And then there's others that might not replace the roof for various reasons. Every condo association has meetings, and it's important. And I try to stress to people, when you buy a condo, you need to attend the condo association meetings, because decisions are being made there, and you're paying money. Usually in a condo association, you might pay $250 a month for that condo. I just sold a condo, another one, where the condo fee was $401 a month. So you need to be there so that you know how they're utilizing your money. They take care of the roads. One association spent $90,000 resurfacing the roads. Just various things. The exterior is typically what they pay for. And then when you're buying a condo, you need to get insurance, and you would talk to an insurance agent, because you're going to have insurance for the interior walls, so that if something were to happen, say the condo caught on fire, or you were in a tornado or whatnot, they would rebuild the exterior, and then your insurance would have to handle the interior of the wall. So I hope that answers some of the question, but it can be complicated because every condo association is different. They do have their bylaws that your lender will put, your agent will put in the contract to purchase, that you want to see those bylaws within 3 days. I usually put 3 days of acceptance. And then you'll get a stack of covenants or bylaws, and you need to read through those, because they might say that you might be a truck driver, and though you normally store your truck when you're not working in someone's garage, but one night you might come home and you might be exhausted and you want to park in front of your condo. Well, that might not be allowed. And it will state that in there, that, no four-wheelers are allowed, on the premises. And I mean, all kinds of restrictions are there in those condo bylaws.
Okay. Say, Veronica. Yeah, that is a
It's
pretty,
important that
that's a
you
pretty
read those bylaws.
Yeah, that's pretty complicated. There's a lot to that. We did get one more question. I want to make sure we cover that because we've only got 5 minutes left in our time here, and I want to make sure that we get all the questions in. And so, I got a question here that says, "What if you do not have income from a traditional job, but you have income from self-employment and significant amount in investments such as brokerage account or IRA?"
I could take this one. So income, the main things that are important about income is that we can document it. And we can document that it's going to be stable. So what they want to see is that, for instance, with self-employment, we would have to document that with 2 years worth of tax returns so that we can look at the continuity of that, because some businesses are seasonal, some have high points and low points. So we have to be able to see the continuity. So they'll have the 2 years worth of tax returns that will use the adjusted gross income. That means after the expenses are taken out, to do that. And then there's also other ways that we can use assets for income and undistributed retirement and different things depending on your age. We can use capital gains if they're also showing that they're consistent. So there's ways to use non W-2, pay stub, 40 hours a week type work. So there's definitely ways to look at all those things, but that's a real specific question. And I'd be more than happy to one-on-one with you to look at your specific situation on what documentation we need and what kind of income that you have that we can use to qualify.
So one last question. The question came in and says, do we have a program that is a rent to own or something along that line that would gradually move a person into actually owning a home?
I've helped a lot of people who have land contracts or have rent to own agreements with their landlord. But that's something that starts with the building owner. That we don't have a program that helps you find a rent to own situation. That's something that maybe a real estate agent can find someone who's willing to do a rent to own situation for you. But that's something that there are lots of ways to do it. There are contracts that allow you to use some of your rent that go towards that purchase price, and as long as we can document that properly, we can do it. So it's definitely something that I've worked with a lot in the past, but there's not a certain program that you can get into to find that situation. You find that situation, and then your lender can help you turn that situation into a mortgage or into a home loan to purchase it and get the deed transferred into your name.
So anyone who is on the call today, if you're ready to set an appointment with any of our professionals here, Dan, Phil, Veronica, put your name in the chat. Just let us know that you're ready to sit down and have that conversation. Just put your name in the chat. You've got the numbers here for all of our professionals here, or you can send them an email. Either way, you reach out to us. We will get this process started, the conversation going with you to move it to the next step for you. And if you are on this call and you're thinking, yeah, I think I maybe want to wait, maybe a week, maybe I want to wait a month, that's perfectly okay. You've got this information here with our team. Please reach out and let us know. Let's move to the next slide. So before we close out, I did want you to know there are some additional wealth building conversations, virtual sessions that you may have an interest in that we're offering. We've got one on the 28th. It's from Operation Hope. It's a credit and money management workshop. If you're interested in being a small business owner, got something called Boss Up. That's on the 28th. And we've got a credit money management workshop on May 1st and the 15th, and then the small business outlook recovery session on May 4th. So we've got several sessions there, but again, if we go back to the slide where we show our presenters' contact information, that's the way we'll end up here. But I appreciate everyone's time. Presenters, you've been fantastic. Appreciate the wisdom that you shared with our participants here on this call, and we trust that the next step will be the keys to their home. Everyone have a great evening.